Hey, what's going on, guys? It's TerrenceRe. I'm back at you with another stock market update. The past couple of days, we've had some good volatility in the move in the market. Vol is expanding. But man, you say, well, how do you know vol is expanding? We'll just come. I'm gonna pull up the VIX really quick. Now, this is a measurement of the volatility of the S&P 500, and you can see we got 1, 2, 3 up days in a row on the VIX, right? So with the VIX moving up, that's showing us that the overall market generally should be moving down. So if we were to come look at the SPX, we would see that we got 3 down days in the SPX. 1, 2, 3. We'll hide some of this stuff so we can see, right? And so what's been the catalyst for the SPX moving down? One of the things we could look to is maybe Apple. That's the first one on my list to take a look at. Now, Apple, we do have some news. So China has told some of their government workers that they can't use iPhones at work. Says Beijing's widening curbs on iPhone use by government staff raised concerns among U.S. lawmakers on Thursday, and fan fears that American tech companies heavily exposed to China could take a hit from rising tensions between the countries. So it when so what you have something like that that's really basically out of the control of the U.S. government, right? So China is I think the iPhone, if I'm not mistaken, is made in China, so they pretty much control whether or not they have a small to do about the stock price, because China has more. Their government tends to regulate companies a little bit more than ours does. But the same thing could be said with the United States and its treatment towards TikTok. So the government employees here in the United States of America can't use TikTok on their phones. So is it a tit for tat? We don't know. Is China doing it? But it really doesn't matter to me, right? I like to give the little backdrop so that we know why the market might be moving. You could see it on the chart, even if you didn't have the news. We see this big red candle yesterday, and then it gapped down today. Now it gapped down, but then off of the gap down, the market did move up to end with a green candle. So you got a green candle on a down day because it gapped down, and looks like the market found like maybe a short term support level right here. Now I don't know if I believe that it's going to hold, but more so, and for me, if I were going to place a trade, I have not placed a trade in Apple yet. But I think that one of the best things you can do in Apple is make the market beat you. The I'm showing right here the IV index, the 5-day IV index has increased in Apple, so that means that volatility is expanding, right? So when volatility expands, that means your expected move, this area right here, this ruler, should expand as well, because your expected move should grow with volatility growing. So instead of trying to pick a direction on which way you think the market is going to go, because we got gaps all around here. We got a gap down here. Let's see if I'm gonna bring my drawings back in. You see it broke out of this wedge. So we had this ascending wedge, right? And then it broke out of this wedge, gap down. Now you got a gap here. Right. And the market looked like it was going to fill it. It didn't fill it completely. So it still got a small space in it. And then you got a gap here. And then you got a huge gap here. So my thing is this, rather than try to pick which direction you think that it's going to go, I would rather just, the best trade in my opinion is to just go ahead and sell some premium. Maybe do a strangle. Come out here, sell the expected move, sell the 18 delta, and then maybe sell the 21 delta on the call side. Make the market beat you. This green area is your profit zone. So you're in essence outside of one standard deviation move. Excuse me. So make the market beat you. I think that's a better trade. You got a 67% probability of profit, and then you got an 87% chance of collecting or making money, making 50% of your premium. So that P50 right there, if you sell that string going, take in that $3.15, you got a 87% chance of making about 157 bucks, let's call it 155. So I think that's a better trade than trying to pick direction at this point. I honestly, I think I'm pretty good with technical analysis, and have a, I don't know which way I think this market will go. Let's take a look at Tesla. Now I got Tesla up. Tesla has some news. Tesla finished down 43 cents, which is really nothing. IV is expanding in Tesla as well. But Tesla, so the thing about Tesla, let me see if I can find where my news article is. Tesla. So I think they got control over some of the EV ports. So I seen something on CNBC saying that they are basically they are creating, or they already have universal plug-ins for your EV batteries, or to plug up the car. So just not for, so they're gonna have these not just for Tesla, but they will have them for other EV makers as well, and to go along with some of the port station charging ports. So basically, not only with Tesla is the leader in the EV car space, but they're also going to have the charging. So they're going to be handling pretty much all of that. And I think that should eventually drive the price up. But right now, we've got this big down move, this gap down. Now, is this move finished? You see, I got highlighted here. I got some support right here. But what we ultimately need to see is this move, is it finished? Right? Let's look at, I was trying to see if I could find that article. Here you go, right here. Hilton to install up to 20,000 Tesla universal wall connectors at 2,000 hotels. So that more automakers plug into Tesla's EV charging network. So basically it's Tesla's charging network, but all the other EV car makers will be using it. So that should, we would think that at some point that's going to show in the stock price. Now, me just looking at this right now, same thing. I don't know which way short term that I think is going to go. We could be seeing it at this point. Let me pull up some indicators just to look. I don't think any of them giving me anything definitive, right? Looks like we're in a little bit of a range right here, and we want to see a breakout to the upside. Hopefully, that's if you're long. So same thing. I think a better trade would be in Tesla is to sell the expected move. If it was me, I don't believe I would sell October 20th though. And the only reason why is because they got earnings on the 18th. So you may not get the decay that you want. So you may have to come in a week early and maybe trade a weekly. Tesla is liquid enough to do that. And same time, maybe sell. I would come a little wider in Tesla. Me and Tesla, I'll probably sell the 15 Delta on both sides. Make it a Delta neutral strategy. But look at your green space. Look at your profit zone. You're way outside of the expected move. And I do believe that you need to be in Tesla because it's a stock that can move. You're taking in $600 in premium. Once again, that's a 75% probability of profit. And you got an 89% of chance of bringing in 50%, which would be $300. I probably wouldn't even hold it that long. You get a little chop, you can probably pull a buck or two, one 150, $200 out of this probably like in a week or so without taking any heavy directional risk. I like that trade a lot, but I will try to stay out of the earnings though. Let's take a look at Meta. Now, Meta, I jumped in. I bought a call earlier. The market jumped up on Meta's news. Meta has some news about forming a partnership. Says PayPal partners with Meta to enable donations on Facebook and Instagram. So that news made the stock. Let me pull up my. I'm gonna go to the intraday chart on Meta and let's take a look at it. So you can see I got my volume profile up. Um, and you can see that basically the move started back here, which would be if we looked at this on the daily, would have been on this candle right here. This is when it formed that hit that support level right here, and you can see that that same level held two times. Now I don't want cycle brackets. Let's look at the rectangle. So if I came like right here, move this across, you can see you got a high here, pulled back, broke out, and then that level held there, held here, and then held here. Look at the wick. And so we got a low, a high, and then a higher low, and then it chop, chop, chop. Then we got a big move right here today. So I jumped in. Now I'm down a little bit on the position. I was up earlier. You can see it kind of wicked around, moved around. But let's see. I think it's coiling up, right? You can see right here, this chop area. There's a lot of, chop in this area. I'm looking forward to break out of this zone, get out of here, and then catch this 310 level. That's what I end up buying. I bought the 310 call. I will not, if this market goes down tomorrow, more than likely, I may just take my losses rather than, that's the thing about buying options. You're on the clock. And so you need to have a threshold of how much you're willing to lose instead of losing the whole amount of the option. It probably would have been better to sell it. The IV rank is so low though that I didn't really want to sell the option. Even though implied volatility is expanding in Meta. The next stock I wanted to take a look at is IWM, which is the ETF of the Russell, which is your small caps, your or small to mid caps. And it has a lot of, the thing about the IWM is it does have some of those small banks, those regional small banks, and they're taking on a lot of pressure right now. So in the IWM, I was thinking that it would make it up here to this level, got about right here, and it is not getting there just yet. I actually own this position, like I own the stock, so I bought some shares in it, and I'm just gonna generally hold it and then sell calls against it. Right, I'm not interested in taking the L's in this. It is something that well, I eat it like the SPY, the Qs, IWM, maybe the diamonds, DIA. You have a TLT. Those particular ETFs, in my opinion, you can kind of sit through them and hold them. Right, they're built really to go up. They will pull stocks out that are underperforming. Now the IWM not as much so as the SPY and the Qs, but I still like to trade it. It is very liquid. And so when we had this low, we did get a lower low, but you can see this wick. Once it made that low, it just bounced and just went straight up, then pulled back. So I'm hoping that this will be a higher low and then that we'll get a move and then get up here into this level. These levels came off of the intraday. Let me see if I pull up the IWM. I'll show you where I got these levels from. And because I didn't get the levels off of the daily. And you can see we got this up move, pull back. It's a classic move. Like for me, I trade this. Whenever I get this move here, I always trade that. like this bull flag right here, and I highlight it for you just to show you when I get these moves like this, I always trade them. The candlesticks pull back, and then you can see that little box right there. They pull back, and then it broke out of the box. Once I get that, then I trade it. And you could say, well, you could have got out. I've been trading it for the past week or so, and I still believe that it's going to go higher. Got a gap right here today, so I could see this market tomorrow come pulling up to fill this gap. Now, what I do is, because I own this stock, because I own this ETF, what I'll do is, on an up day, I get an update tomorrow, then I'll sell a call against that position. I'll sell a call. If I get an update tomorrow, let's say it comes up in here, I'll come right out here and maybe 20, I may even go out 43 days. It just depends. It's a very liquid stock, so it does, I can trade weeklies in it and sell the expected move. But I want to sell into an up day. Like, I want to sell calls into up days, and you would like to sell puts into down days. You want to sell into the strength. And so I would like to, on that, if I get an update tomorrow, we'll step right in here, sell one of these calls and get outside of the expected move, and then see what happens. May even come down in a little bit and try to collect about $2, but we'll see what happens tomorrow. Well, hey guys, you got something out of this, hit the like button, hit the subscribe button, share the video, and be on the lookout. Try to get you another video in tomorrow. We'll see what Meta is on the clock. That's the one I'll be watching tomorrow, during the day, and we'll see what we get. With that, guys, I'm out. Peace.